JB here. Hope everyone's doing outstanding. August 12th, Tuesday, 9:01 a.m. CPI day. If you celebrate, hope everyone's doing outstanding. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the green, up about a 0.5% here after the much anticipated CPI data. If you would have read the headlines over the weekend or over even the last few weeks, you would think that inflation was going to skyrocket. June's numbers, escalating inflation, that the tariffs are finally showing up, and that was kind of like set the stage. But then the market was kind of holding its ground outside of the VIX. Rallying yet, well, not wouldn't say rallying, about 5% yesterday, and the market melting into the end of the day. But then, you start thinking, it was like if the market's one of the best forward pricing mechanisms out there, right? So if the market thinks that inflation was going to be a heck of a lot worse than expectations, hotter than expectation, you would have to think that we would probably be down 1.5, 2%, or somewhere in there. But instead, the CPI data came out. The overall number came in at 2.8%, which is still above, shows inflation, right? 2.7% was the last one. So up, but it was lower than expectations, right? I think it was 2.9%. But then you're going to have the bears come out, right? So this is what they say is that the metric that everybody looks at is the core, right? The key inflation rate. This is from MarketWatch right now, or is it Barron's? One of those this morning. Uh, Key inflation rate shows biggest rise in 6 months, but Fed rate still in play. So those, it's the spin, right? I mean, I guess depends on how you look at it. Similar to some of the GDP numbers and some of the other inflation data. If you're bullish the economy and bullish what's going on, then this data is bullish, right? If you're bearish and you think that tariffs are going to destroy the economy, uh, destroy jobs, cause runaway inflation, hyperinflation, stagflation, whatever you want to call it, then these numbers are bad, right? So the core number is 3.1%. So estimates were like 3.0%, but the core excludes energy and food, right? So typically the reason they do the core is because sometimes there's a lot of fluctuations in energy, oil prices, things like natural gas prices, and then food, right? Supply issues, frost kill the oranges or whatever in Florida, or you have some other issue with fertilizer or a drought, things like that. So it kind of shows a more consistent number because there's less fluctuations. But to me, if you look at the core number, the part of it is the food, right? And food came in flat. And if there's a big thing with inflation and concern, it's a consumer, right? So to me, the core numbers that are exclude the energy and the food, it should be included, or you should look at that big number, which was a 2.8%, because that's the necessity stuff, right? People don't need to buy furniture. People don't need to buy, a new washer, a new dryer, unless you get it. Now you probably go and get it fixed because if you don't want to pay higher prices, that's what you do, right? Uh, so those are not necessity things, right? So if the not necessity thing prices are flat or going down, I mean, and to me, that's like the market force is going to be at work. People, supply, demand, right? So even if the tariffs come into effect, Goldman Spectacular had that article over the weekend that consumers going to pay the brunt of the tariffs, and maybe they do, right? I keep saying I'm not naive enough to think that at some point tariffs don't come to have an impact. But if it's on non-necessity items, and those non-necessity items, people decide, hey, I don't want to buy them. Do you think that the car companies, the GMs, the Fords, or whatever, can raise price on cars if people are just getting their cars fixed, buying used cars, Carvana, doing the robo taxi instead? I just joking aside. So to me, that's where the free market comes into play, right? So because of that, then you have to think, okay, well, then maybe these and the end retailer will have to keep the prices same, eat some of the tariff, and then the exporter, right? So uh, we'll see what happens. This still weighs out, right? So the good thing is this number came out, so kind of gives a little breathing room ahead of the next data point in September before the next Fed meeting. So that kind of helps. And then we have Jackson Hole, which I think if Powell can kind of paint this picture of, hey, we're going to be somewhat dovish, even if this inflation situation is not completely under control, I think that bodes well. So, uh, obviously, the market reaction here today, if yields can start coming down, maybe we can get into the mid 640s and higher on the SPY. So that's kind of overall markets here. So kind of like a sigh of relief this morning. This is a chart from Goldman Spectacular, right, showing the brunt. U.S. consumers will bear the brunt of Trump's tariffs, at Goldman Sachs economist, same Goldman Sachs economist who had the odds of recession at 65%, whatever that was in April. So, not saying, hey, take everything with a grain of salt. A grain of salt. I had the quote from this morning. Who was that comedian? Is it George Carlin again? I always quote people. Uh, And yes, some people see the glass half full, others see it half empty. I see a glass that's twice as big as it needs to be, right? So, I mean, it's a market. So there's buyers and sellers. So there's always going to be a glass. There's going to be somebody who's a bull, someone's going to be a bear, right? So, uh, until this all gets figured out, there's still a lot of uncertainty. So until we get PPI data on Thursday, that'll be the next thing that hey, the bears will look at and say, oh my gosh. Uh, we still get retail sales on Friday, consumer confidence on Friday. So a lot of things still to muddle through, but I think this CPI data kind of at least is sigh of relief. All right, so that's kind of overall markets. I had the range 628 to 640. I think it was 646 on the SPY. So I don't know if we'll get to 646 here today, but certainly watching that. And I put on the watch list too. The SPY has made 6 straight consecutive sessions of higher highs and higher lows intraday. So today it looks like maybe we'll get 7 in a row, which would be a great sign of an uptrend. At some point, that comes to an end, but definitely a good sign. Even with yesterday's pullback, and it's like we've been alternating between gains and losses since that Friday jobs report fiasco, right? That big sell off, and then we're red day, green day, red day, green day, red day, green day. It looks like today we might reverse yesterday's red day. So I always say I hate gaps, right? So hopefully, we don't have this major reversal here today. So always got to keep that in the back of your head that a lot of times these gaps sell off, even if there's positive data. So I'm not, just immune to thinking that the market's just going to hold the gains here and just rally. So don't be surprised if we get a pull. I don't know if we get a pull to the open price, but I hate gaps. So hopefully don't pull all the way back. All right, so that's overall market. Now just quick on individual names. CGC again. Shout out to Seb pointing this out last Friday. It's a name that's had some monster gains back in 2024. So sometimes you have those memories there and you're like, okay, is this setting up again for the similar type of move? And the more I was even thinking about last night, I was talking about the rant last week too when I had those calls in the afternoon. It's just like, to me, I think there's a huge culture shift in regards to health. And I think I mentioned the Boston beer side with declining alcohol sales, and you see it with Constellation Brands as well. And then people are turning to alternative things. And it kind of started with the sparkling seltzer, but that still had alcohol in it. But then now you have gummies, right? And back in the day, gummies weren't as prevalent because of the legality issues. But if they can reclassify marijuana to the point where a lot of these states, which had to do it on an individual basis, have to legalize it, if it becomes just mainstream, obviously that's going to improve revenue and margins, and then it opens the whole banking sector, right? So a lot of these companies who are in that space can't get loans, can't do business with banks because of what the product they're doing is not legal on a federal basis. So anyway, we'll see if this is the start of a major one. 3 sessions in a row to the upside on CGC. You start looking 180, big spot back there in May. If it gets over that, probably heads over $2. I was looking at the January $3 strikes. I think they were like 20 cents at times yesterday, and I'm like kicking myself this morning. Hopefully, I get another opportunity. But if it holds 180. Here, I'll look to add those January strikes. Already locked some of the Octobers in for 100%. I might lock a couple more in just because. And then if it holds here, I'll look to get some of the January strikes. The thing is, I always say I hate looking at names further out because especially a speculative name like CGC, because maybe this is only a 3 or 4 day rally and then it just fizzles and then you're staring at expiring calls for the rest of the year. And it's kind of like it's a form of torture. So hopefully that doesn't happen, but still like to set up here. And then that brings me to IIPR. And IIPR is the only true main REIT, real estate investment trust, when it comes to the cannabis space. And they've done well over the years, and they have some really great folks who run this REIT. And it's coming on hard times. Some of it's the regulatory stuff, right? Because back when the previous administration, they were supposed to reclassify. That never happened. So it seemed like everything was kind of getting pushed to the wayside. And now, hey, yesterday, the news was so the Wall Street Journal article over the weekend brought a reporter to ask the question yesterday at the press conference that had nothing to do with marijuana. So to me, that's a good sign. So another name kind of under the radar, but when these names start to run, they don't become under the radar anymore. So premiums are still somewhat inexpensive on a risk score basis. Don't be surprised I add some of those calls in lieu of or in conjunction with some more CGC calls. That's CGC, that's IIPR. Lemonade, last week I got the monster on the $50 strikes to close those out, and then I went and rolled them out to the 55s for this week, and then we had that week session. Actually, was Lemonade was weak because Root reported that a disappointment. Stock sold off once it broke 50. I closed them out flat, and then sure enough, it's been rallying and rallied on Friday, or at least held the gains. And then yesterday, up nearly 7%. I was looking at more strikes, and I'm like, the 55s are still flat from my entry from last week. So if it continues to run and 53.85 is the November highs, I figured the 60s offer the best risk reward, right? So the risk, very small risk, right? So instead of paying the 90 cents, get a very small risk. And then the reward side is even if it only gets to 56, 57, or even lower than that, the calls are going to be at least a double, maybe even higher. And there might be a double at the open here. So Lemonade's up here 53. It's actually 53.85 was the last pre-market trade that just went through. So that's the 52-week highs. It breaks that at the open. I think it's off to the races. I'm going to try and look to close some of my 60s out to cover costs if I get a chance at the open, ride the rest. And you have to think these shorts have been underwater for quite some time, considering the stock's been holding. Like in the Junes, it was in the 30s. And the high short interest has been there since last year when the stock was 18 bucks. So you have to think they're paying interest, all that at some point they got to pull the cord on their bear case and just move on. So that's Lemonade. UNH spiked at the open yesterday all the way up to 258. Locked some of my calls in for nearly 100% to cover costs. Held the rest. Still think this is in the midst of a bounce. Hate to try and catch a falling knife. Today would be possibly if it closes green would be the first 3 session rally since back in June, early June. So to me, I mean, last time it didn't mark the bottom, but one of these, I keep saying, one of these bounces and holds will mark the bottom. So not going to add anything just yet, but if it gets back over 250, I might look for some strikes into next week as well. Not much here to add on VKTX. The August strikes still remaining elevated. So like I mentioned yesterday, I'll probably just hold the August into tomorrow. And then the disappointing thing is the strikes are hard to find, inexpensive strikes now. So but at some point I'll close those out, roll them out a little further out. Lulu, speaking of falling knives, all the way up to 192 at the open. Talking about last week, at some point it's going to bounce back over 200 bucks. The 205s looked interesting on risk score basis. Grabbed those. Sure enough, that was the top. All the way down to 52 2-week lows in the afternoon. It's up here at 188. If it finds a bounce, it's gonna go 5% one day, 7% the next day. Calls will be solidly green. I'm not going to add anything more just yet, but maybe if it gets back over 192, I'll look for more strikes. And then Reddit, Reddit similar to Lemonade. I had those strikes last week, the 240s. It found pressure. I went and closed them out for a loss, and then the stock's up 15 bucks or so. Well, actually, it was up 15 bucks from my entry from last week, and the calls are still flat. So I'll continue to be patient here. The premiums are expensive because of the implied volatility. Maybe today. I think once it gets over that all-time high, 230 something and change, I think it's off to the races. I think that's it, folks. I'm trying to think of some of the other things. Just more data this week. There's still some earnings. Cisco, some earnings this morning. Was it Circle, Chime? One of those reported. Yeah, so have a great day. I'll be back. Rock and roll.